Do you believe celebrity investor Cathie Wood will stay a Tesla bull when Tesla stock starts crashing? Wood has long been recognized as a proponent of innovation, and Tesla is inventive as it can get. Still, the company's stock has been taking a battering in the stock market for several months now. You definitely would not want to miss what Wood has to say. ARK Invest CEO Cathie Wood has already stated her and the company's 5-year plan for Tesla, which will expire in 2024. This is a base case of $7,000. According to Wood, they have arrived at that amount by assessing the likelihood of 10 potential eventualities, including bankruptcy. We tried to be as fair and balanced as we possibly could be, but our confidence level that this stock is heading for $7,000 over the next 5 years is very high, Wood said last year. However, technology has been one of the worst performing sectors in the stock market last year, which is in sharp contrast to its huge gains throughout 2020 and 2021. Not even prolific tech investor Cathie Wood has escaped the turmoil. Wood is the head of ARK Investment Management, and its flagship ARK Innovation ETF has lost 57% of its value in 2022. ARK is known for investing in innovative companies with long-term time horizons, and despite the ARK Innovation ETF incurring heavy losses this year, it has still more than doubled since its launch in 2014. That underlines the significance of disregarding short-term market gyrations and focusing on the big picture. Giving credit to her moniker as a great investor, whose trading has surely been timely, buying back shares when the stock sank and selling some off when it gained higher. Over the past several months, Wood has been building up her Tesla shares whenever the stock goes low. In fact, ARK Invest, the firm founded by famed stock picker Cathie Wood, scooped up millions worth of Tesla a few days ago after the electric vehicle maker's worst daily loss in more than 2 years. As Wood continues to double down on what initially garnered her riches, Wood's flagship ARK Innovation ETF purchased 145,000 shares of Tesla worth $15.7 million at the automaker's $108.10 closing price several days ago. While ARK's autonomous technology and robotics ETF snagged an additional 31,000 Tesla shares for $3.4 million, according to daily transaction statistics. Those purchases came after Tesla's 2.2% collapse on January 4th, its greatest single-day decline since September 2020, with the stock now down roughly 75% since November 2021. Wood, who invests in firms engaging in disruptive innovation, won millions amid Tesla and other favorites' ascent in the early days of the pandemic until a harsh 2022 sell-off wiped away ARK's gains. ARK holds around $487 million worth of Tesla, its 5th largest position, most of which is in its namesake ETF, which has added more than 300,000 shares of Tesla to its portfolio during the previous month. Though a negative macroeconomic climate and elevated interest rates brought down the market as a whole, Tesla's decline mostly corresponded with Musk's purchase of Twitter, dedicating much of his time and financial resources to the social media firm, much to the ire of Wall Street. Wood has remained bullish amid the slump, predicting last month that Tesla shares will reach $1,500 by 2027, indicating a more than 10-fold increase. According to Wood, there are 3 sources for the increase in their predicted price objective. The first was the advent of the Tesla killers in the market. Because of this, Wood and her business ARK Invest predict Tesla's market share to go down from 17 internationally, including China, to something lower. However, it instead rose up to 18% in electric automobiles. So what we're learning is Tesla is just so far ahead of the pack. And I'm talking about the BMWs, the Mercedes, as far as range and other important metrics when it comes to electric vehicles, said Wood. She continued, the Tesla's battery cost is 3 to 4 years ahead of any other auto manufacturer in terms of cost declines. So every other auto manufacturer will, if they want to be competitive with Tesla, if they want to be competitive they will have to sell their cars at a loss. At the same time, they're losing their internal combustion engine business. So there they have a tremendous difficulty, Wood explained. Most other vehicle manufacturers, unless they want to lose money on their automobiles, most are not going to be able to stay up with or to approach Tesla's combination. So that's quite essential from a performance point of view and a range point of view, said Cathie Wood. When questioned about her thoughts on Tesla in 5 years, Wood responded that compared to other automakers, Tesla undoubtedly has an edge. She claimed that if one assesses cars not by brand but by range and power combination instead, Tesla is the greatest pick among them all. Still, she said that the most prominent vehicle brands like Volkswagen and BMW had done marvels in the previous several years. It is merely that Tesla is much ahead of them in terms of the range and power combo. Wood claimed that most other auto manufacturers are not going to be able to stay up with or approach Tesla's combination unless they want to lose money on their automobiles. Wood underlined that that's really essential from a performance point of view and a range point of view. When questioned about her thoughts on huge firms competing with Tesla in electric vehicle production, Wood has this to say: they are failing badly. Branding is something different. These other vehicle manufacturers have brands and a lot of brand loyalty. But I think as buyers start to migrate from gas-powered to electric and look at the characteristics of the different automobiles, says Wood. She remarked that although people might still be lured by brands, simply they won't have as good an electric vehicle as Tesla will produce. In a Yahoo Finance interview, ARK CEO Cathie Wood highlighted their idea that gas-powered vehicles are going to be outdated within the next 5 to 10 years. And the traditional auto sector has to figure out a method to convert to electric vehicles. In mid-October, another ARK official voiced optimism about the leading EV business during a CNBC Squawk Box interview. ARK Invest CFA Tasha Keeney discussed the basis for ARK's positive attitude on Tesla. Keeney said electric vehicles represent merely single-digit percentage points of overall auto sales, so we have to remember that it's still an early market. But we do clearly regard Tesla as one of the market leaders both in electric vehicles and in autonomous. In a more recent Yahoo Finance interview, the ARK founder and CEO claimed she was not concerned about Musk's leadership at Tesla. This comes amidst mounting fears from investors that Tesla CEO Elon Musk has been losing focus on the EV company as he is spending much of his time at Twitter. Wood told Yahoo Finance that Elon's main function at Tesla right now is bringing it towards an autonomous taxi platform, which I think will happen in 2024. I think he expects it will happen next year. I think he's as dedicated as ever on that today. Not only is Tesla the largest maker of electric vehicles in the world, but it's also the only lucrative pure-play EV stock investors can buy in the US right now. Tesla's competitors are either current car producers who are still carrying their legacy combustion engine vehicle industry, or they're fresh up-and-coming EV aspirants that haven't T-scaled production yet. Moreover, Tesla has built some of the most powerful autonomous self-driving software, which might represent the future not just for personal automobiles, but also for the mobility industry. The company has disclosed intentions to produce a fleet of fully autonomous robo-taxis in 2024, which won't require any human interaction. One estimate says autonomous vehicles will be a $2.1 trillion industry opportunity by 2030. According to Cathie Wood, there are a lot of advances in the car industry that put the traditional auto industry and subsequently traditional automakers in harm's path. Wood alluded to Tesla's autonomous taxi platform as an example of such inventive change. Beyond the automobile business, Tesla continues to grow its position in home solar and battery storage. Demand is expanding rapidly, and the company has constructed a new facility just to make these batteries to ensure adequate supply. According to Tesla's 2021 impact report, the business has deployed 4 gigawatts of solar systems since 2012, providing 25 terawatt-hours of clean energy. That's more energy than every Tesla vehicle and every Tesla production facility has consumed over that time frame combined. It's solidifying Tesla's legacy as a truly green energy firm and not simply a car producer. Tesla and the EV sector in general are entering a new phase, and the business is preparing itself to continue to lead the way forward. While returns over the coming years may not match recent results, Tesla has a lot of irons in the fire. It's important looking attentively at whether this is a good moment to invest. Overall, Cathie Wood is more positive than ever on Tesla stock. Wood, who is a great proponent of innovation, consistently displays her support for Tesla and its impending creative ideas. Wood's recent purchases during drops suggest that she sees them as a purchasing opportunity instead of a cause for concern. Subscribe to this channel for more.